There are so many videos on how to make money and trade as a prop trader, but in this video, I'm going to show you how you can start a real prop firm. Let's get started. Hey, it's Nagy and welcome to my channel where we help financial entrepreneurs grow their business in the financial markets. And if you like this video, hit that like button. So what is a prop firm? A proprietary trading firm or prop firm is defined as a bank, brokerage firm, or private company that trades stocks, bonds, options, commodities, or Forex using its own money instead of the customer's money. Since most prop firms do not hold any customer accounts but use their own capital to trade, a prop firm can rely on certain exemptions under the Securities and Exchange Act of 1934. So, there are two types of prop firms: a traditional prop firm and a Forex-only prop firm. A traditional prop firm allocates their own capital to various proprietary traders that specialize in trading certain securities like stocks or commodities and utilizing their own strategies. Each prop trader has certain trading limits and risk exposure set by the prop firm. The prop firm can restrict its prop traders to only trade the firm's strategy or allow the prop trader to utilize their own strategy approved by the prop firm. In a standard set of operations structure, partners agree to place capital in a certain amount in a master trading account. From that master account, the partners can set up sub-accounts for each prop trader and then allocate a specific dollar amount to that account to trade with. Most prop firms require that traders maintain a certain amount of risk capital to absorb any losses in their daily trading. Based on various factors such as trading experience, dollar size, and strategy, the prop firm allocates anywhere equal to 2 to 10 times the risk capital to the trader. If set up properly, the prop firm allows outside prop traders to trade the firm's capital with minimal downside risk, but takes a smaller percentage of the profits. Prop traders are afforded a greater leverage of capital with a small amount of their own capital, and they also receive a larger percentage of the money realized gains to compensate them from any downside risk. In a Forex-only prop firm, the business model is totally different. The overall objective for this type of prop firm is to set up traders funding through leverage, which would provide capital to profitable traders. The prop firm charges sign-up evaluation fees to participating traders, which can range between $50 up to $500 or more, depending on the size of capital they wish to trade with. On average, 85 to 90% of the traders participating in the challenges will fail. And in most cases, the prop firms will retain the evaluation fees and to fund successful traders while setting aside a portion of those earnings to absorb any losses. Once traders have proven that they can be profitable by passing the evaluation period, they become part of the funded community of traders with access to accounts funded with the amount of capital specified by the Forex prop firm. Now here are 3 top requirements to set up a successful firm. Requirement 1. Choose the right brokerage liquidity provider. There are a lot of Forex brokerage liquidity providers out there, some small and some large. I suggest a provider that has at least been in business for 10 years. Align yourself with a liquidity provider that will help your firm grow. And to get lightning fast execution with minimal slippage, look for liquidity providers that have execution servers located in Equinix data centers. These are centers where it's hosted by large financial institutions. Requirement 2. Choose the right software provider. The right software provider should be affordable to startup Forex firms. Through its Customer Relationship Management System, or CRM, the prop firm should be able to perform admin functions such as setting up workflows, receiving leads, allocating tasks, trade parameters, and risk analytics. The software should enable the prop firm to set up challenges and terms and define events that, with risk parameters that would allow them to be met. Now here's how it should flow. A potential trader would sign up for a demo challenge. They are then taken to a screen where they will pay the prop firm for the challenge. After a quick due diligence, the trader is approved to start the evaluation. The trader then must meet the conditions set by the prop firm to move to the next phase. Once the conditions are met, the participating trader gets funded and starts trading in a live account. The software should also offer risk analytical functions and trade parameters such as maximum drawdowns, profit targets, and daily trade limits. Requirement 3. Manage your capital wisely. Recently, many prop firms have closed their doors due to irresponsible financial management. This is typically due to overspending of profits earned by the prop firm and not enough money left over to pay out their traders and other expenses. Having a disciplined financial business model will help avoid the temptation to spend all you've got and focus on the big picture. Hiring experienced prop firm consultant like Frank Nagy Financial Services will greatly reduce the burden of setting up your prop firm. A good consultant will make the appropriate introductions with liquidity providers, software vendors, and provide financial management tools which will help your prop firm grow. Have you thought about starting your own hedge fund or Forex fund? Click on my video below. And if you haven't yet subscribed to my channel, click on that subscribe button below so you can get updates when I post my next video.